All right, everyone, we'll go ahead and get started here. We appreciate you guys being here at today's TradingPub event. Real quick, before we get started, we're going to play just a quick video to tell you a little bit about the TradingPub for those of you that might not have joined us before. But real quick, just to kind of give you a quick rundown, basically with our events, they're free educational events on the market. We work with some great, outstanding presenters, and we're very excited about having John and Jeremy both here with us today. We are going to record the event. We'll get the recording posted on our website. Just to kind of type this in, if you go to tradingpub.com, click on the free education section, we'll have it posted under that section, most likely sometime tomorrow. But again, we'll email out a copy of the recording to all of you guys who registered as well. So we appreciate you guys being here for sure. And I'm going to play a quick video, and then I'm going to turn things over to John. All right, good deal. Well, John, at this time, I will turn things over to you, and the room is officially yours.
All right, thank you very much. Welcome, everybody. I appreciate you guys taking the time to spend with us here and to go through a presentation of what we're going to offer today. We're going to spend a lot of time talking about Fibonacci trading software. We're going to talk about how you're going to use Fibonacci as a roadmap for your trading, and different ways that you can use these things to really become a more confident trader. I always put up a disclaimer for everybody, so you don't have to really read through this. Same one that you know, but for video purposes, always good to have a disclaimer in there. I want to give you guys just a little bit of a background on myself. You guys should see, tell me if you see the next-gen software background slide. Do you guys see that okay? All right, good. Just want to make sure that that's actually showing. If for any reason you guys lose that, let me know, obviously. Also, I'll be more than happy to answer any questions that you guys have if you guys save them up for the end. I would appreciate that. I started Next Gen Software Services back in 1997, and prior to that, I was taught how to do manual Fibonacci support and resistance, and it really encompassed hours worth of manual Fibonacci calculations, sorting and ranking, and we used to teach seminars on how to do this manually. And that's really what got me inspired to write this software program, because we'll call it laziness. I didn't want to do 4 or 5 hours worth of work a day, and I figured if we could automate the things that we were doing, we wouldn't have to spend 4 or 5 hours a morning doing analysis, constant analysis during the day. So we began work on an automated Fibonacci program in 1997, and we had our first release of this program in 1999. And the Fibonacci engine itself really is unchanged since 1999. So we're going on well over 13 years of using the exact same logic in the Fibonacci program, and I think that's a testament to Fibonacci itself and how it works and why it works. We spend our time really at NextGen teaching traders really from the ground up. If you have zero experience trading the market or don't even understand what the charts are telling you, we really work with those traders to get them from a ground zero up through a functional trader. We also take traders who are experienced in the market, who are already trading either moderately successfully or even highly successfully, and take those traders and work them towards really the goal of risking less, making more, and really just adding an additional tool to their arsenal. We have a program called the T3 Revolution, and it actually will generate live signals on the chart and plot an arrow on the chart whether there's a long or short program. And really, we've got almost 5,000 clients with NextGen in the last 13 years. So we've really worked a lot with traders, and we would like to think, I wouldn't say perfected, but we've almost perfected the art of teaching somebody how to recognize the best trades possible. There's a lot of complexity that goes into the software and some of the things that we do, but the actual use is very simple. And we really focus everything that we do on Fibonacci. So what I'd like to do is kind of go through some of the major stuff that our software does. And for those of you guys that are familiar with Fibonacci already, and many of you, over the last 13 years, it's been really nice to see, since we automated the Fibonacci has become very mainstream, and most platforms have the basics for Fibonacci analysis in them. And there's a lot of classes and a lot of talk of Fibonacci out there in the marketplace. So it's really nice to see that it's growing in popularity. What our software does, just to kind of give you a basic premise, it takes major swings in the marketplace and it automatically reads every little twist and turn in the market. And essentially what our software does is it labels each of these swings as a 1, 2, or 3. And it just really Fibonacci retracements, which I know most people are familiar with, 50%, 618, and things of that nature. There's 4 types of Fibonacci analysis that our software will do when it's looking at automation. Retracements is the first one, and it's really taking the distance from a low pivot to a high pivot and then measuring how much of a pullback against that major swing the market happened. There's another type of Fibonacci projection that we'll use, and it's what's called an extension. An extension will take the distance from the number 1 pivot to the number 2 pivot, and it will multiply and project out into the future 200% of that range, 261% of that range. It'll project out lines into the future, and really what we're trying to do is we're trying to build this roadmap of where do we have high concentrations of Fibonacci support and resistance. So our software, just to kind of give you a little bit of the inner workings of it, it will actually do every 1, 2, 3 swing from the native bar time frame, whether it's a 1-minute chart or a range bar chart or any type of chart that you're using. It will then synthetically bundle those bars to create a higher time frame bar. And really what our software does is it calculates possible retracement, these extensions from the number 1 to the number 2 pivot. The third type of Fibonacci that we use is what's called an expansion. And that's really measuring the distance from the number 3 pivot to the number 2 pivot. It's basically measuring the retracement distance, projecting out into the future based upon where did the move start, where did the move end during the retracement, and then out into the future. So our software will do this from the native bar time frame. It will also build 10 synthetically higher time frames and calculate all of these projections for all these multiple time frames. The last type of Fibonacci projection that we use is what's called an alternate. And alternates are useful. It takes the distance from the number 1 to the number 2 pivot, and then it waits until the number 3 pivot or the retracement pivot is actually established. And then it projects out Fibonacci levels out into the future. And really, every Fibonacci projection, it's just a projection. When you look at them, you don't know for certain, at least initially, whether the 100% is going to hold, the 1.618 is going to hold, the 2.618, or any of these things together. It's when you take multiple levels of Fibonacci, and keep in mind what we're trying to do here. We're trying to generate Fibonacci projections from every possible angle, measuring the 1 to the 2 distance and out into the future, the retracement distance, measuring the distance of how deep the retracement is, so we get a very thorough picture of what's happening in the future. All right, so before we get a little bit further, everybody asks me this question, and I get asked it a lot. And this is, again, my theory on why Fibonacci works. And for those of you guys that have done any study in Fibonacci, you know that most things in nature have a very Fibonacci-based pattern to them, such as the distance on your nose from the high to the low of your head, the distance of your belly button, flowers, seashells, and there's a lot of Fibonacci relationships in nature. So when we look at the markets, we have to ask ourselves, what creates the market? And the answer is you guys. You, me, the institutions, everybody's perception of, high or low, or supply and demand, fear and greed, if you will. All of these things create the orders that you guys place, whether it's a buy order or a sell order, and all of these orders create a swing in the market. And we're all familiar with swings. They go up, they go down, but it causes these swings, and really these swings are based on human interpretations, whether the software that an institution is using creates that interpretation, somebody wrote it, or whether it's you doing your own technical analysis. So it's human emotions, and because Fibonacci is so prevalent in nature, we're using Fibonacci in our software, the T3 Fibs Pro Trader, to really measure each of these emotional responses in the marketplace. And if you gather enough of these emotional responses, in my study, I've noticed, and those of you guys that have done Fibonacci as well can attest, that the upcoming emotional response is very proportional to the response that just happened in the marketplace. So really, this is the premise that I built our software around for doing Fibonacci and really building this roadmap for ourselves, is that the emotional levels of traders is repeatable and it's measurable. And because it's measurable, we can then chart these things, and really the software, when it measures these swings, it's using the algorithms and ranking and sorting all of these potential Fibonacci turning points. And when it does this, it narrows it down, and this is what we call confluence areas. Some of you guys call them support and resistance. Other people call them clusters. Call them what you will. If you were to take just this little chart that we did the 1, 2, 3s from, and you were to do every possible Fibonacci swing, alternate, retracement, expansion, and retracement, skip one of those. Anyway, if you did them all, this is what you end up with on the right side of your chart. You end up with, and keep in mind, this is only from a 24-hour period every ratio. So you get people in the market today, and there's a lot of good analysts out there that are able to figure out which one of these areas are going to be the most tradable because they use only a few ratios. And really, when our software runs, we look at 30 days worth of data. So if you can understand that this is only from 24 hours worth of data, you can imagine how many potential Fibonacci support and resistance areas come from a 30-day window on a chart. What our software does is it ranks them, sorts them, and we've noticed that higher time frames have a higher chance of turning the market. So the ratios from a higher time frame are more important. We've also noticed that ratios that have a higher number, meaning let's say a 261% projection, typically has a little bit more stopping power than 138% projection. So when we filter all this out with the software, this is what we end up with on our chart. Okay? We end up with thousands of Fibonacci projections that are ranked, filtered, sorted, and then they show up as very simple, very easy to read red and blue lines. Now, this is what really builds the roadmap for us as traders to be able to understand where these Fibonacci support and resistance areas are that are calculated for the upcoming trading day if you're a day trader, or if you run this on a longer term chart, you know, the areas will be good for a week or two for swing traders and, you know, intermediate term traders. If you run it on daily charts, it'll be good for long-term position traders. And I know long-term position trading is a dying breed with the volatility in the market and things like that. Most people that we deal with, you know, are either day traders or, you know, 1 to maybe 4 or 5 day swing traders. So Fibonacci works on every. So what you end up with is Fibonacci resistance areas like you see up here at the top, and it holds. And then you see the market goes down and it trades right through a Fibonacci support area. And you'll get back and forth areas, you know, but overall the major turning points almost every day in almost every market are measurable by the Fibonacci. Now this was a crude oil chart from May 31st. And what I've done is I've put 3 days in succession for you guys. So this next chart is yesterday's crude oil. The first one was Friday. And you'll see not every Fibonacci area is going to hold as support or resistance. So what we do then is we take additional indicators to help us define whether these areas are going to hold or whether they're going to break. And really, as you start to look at these areas, you'll notice that there's a high correlation between the turning points and Fibonacci areas. Now again, you know, I can make one guarantee to you guys. There's one support number guaranteed to hold, and it's always going to hold forever, and that's 0. Other than that, all bets are off. So as traders, what we're trying to do is we're trying to determine what type of strength and momentum are heading into these support and resistance areas, and we're going to get to how to trade them in just a second. So as we look at the next day, this is actually today's support and resistance areas on our chart. You'll notice, again, resistance areas will break. It'll pull back to it to become support. And for day traders, you know, this area of support is a perfect opportunity for a long trade. Now, are you going to get $500 or $1,000 a trade every time? No, that's not going to be the case. You know, we're looking to make anywhere from $100 to $300 or $400 on a trade, depending on the setup. So you'll see the market trades back down through Fibonacci support. Once it trades through support, it pulls back, becomes resistance. This is where we would start looking for short trades to trade back down to the next Fibonacci support. We end up with the divergence at the bottom, and the market takes off. You can see again breaking through Fibonacci resistance, we start looking to the next Fibonacci resistance area as a target. So it's not really just crude oil that we look at. You know, we have a lot of traders that trade the S&P. This is the S&P from today. So any of you guys that are S&P traders, I don't particularly watch it myself. I watch the Russell more often than the S&P. But if you were an S&P trader this morning, you know, 6 o'clock, you would see that we held a support area, and you're able to start looking out into the future on where Fibonacci resistance is. And you can see 1645 was where Fibonacci resistance, and ultimately that ended up being the high, really for the morning time. This also holds true on the Russell. You know, this is the Russell chart from today. Again, you'll notice that the market will trade back and forth through these areas some, but the major turning points are really what we're looking for target areas. And you guys, I know you have questions. If you save them to the end, I'll be more than happy to go through any of them. So let's talk about what everybody wants to get to, successful trading. Bottom line, you don't trade for fun, you trade to make money. And, you know, I contend that, you know, the old adage of buy low, sell high is a good one, but most people can't really accurately define what's low and what's high. So when you're looking to be a successful trader, you know, there's two key principles that I think you have to have. You have to know exactly where to get in with the least amount of risk. And you also have to know where to get out with the maximum reward or profit. Or if you're going to lose, you have to know how to lose the least amount possible. And really, the ability to do these two things consistently day in and day out are what separates successful traders from non-successful traders. So we talked about our T3 revolution and its signal calling. Now, I put these up here. I'm not going to read them, so don't fret. We have 3 signals that are automated in our software. And there's 2 trend trades and 1 momentum trade. And I won't go through the rules for you guys. Instead, I'll show you a picture. I'd rather just show you a picture and show you what it looks like. So here is, if you arrow here, this is a trend trade that's automatically generated on a chart using NinjaTrader. And this will pop up live on the close of the bar. And it really just signifies that we have a trend trade to the short side. So if you were to look at this and say, hey, do I want to take this trade? You know, we start going through a bunch of different criteria, which we'll get into a little bit of it in a minute. The second type of trade beyond the trend trades is we have what's called momentum trades that are automated in the program. And momentum trades are a little bit easier to see. You know, they don't have the move and then the pullback and then continuation. Momentum trades are really defined in our rules by strong MACDs, strong moving averages, areas from which to take the trades from. So again, I don't want to get too much into trading rules per se. If you guys want to go visit our website, on our education page on the website, you can download a PDF, and inside this PDF there's videos that discuss the indicators and videos that discuss the rules and really get into more particulars. I don't want to really take up 2 hours of your time here, just want to give you kind of a basic introduction into it. So as we look at just some examples really of the Revolution software, this is from the Russell futures chart from yesterday. You'll notice that the Revolution had a couple signals, had a short signal here and a short signal here. Now again, the rules that the Revolution have are not designed to catch every move on every market every day all the time. You know, you can't walk into a bank and say, give me all the money, or they're going to call you a bank robber. So what we've done is define very specific rules and very specific conditions where we think we have a much higher advantage trading the market. So you'll see, just to kind of show you guys some examples on the Russell here. If we go to the next chart, this is crude oil examples, and this is from today. So earlier this morning, 9 o'clock, this is Central Time, there was a short trade. There was also a long momentum trade that was generated by the Revolution software on an automated basis. This is crude oil from today for this afternoon. Many of you guys recognize this, I'm sure. 94.40 is a high, which is our Fibonacci resistance. And then there was 2 short signals generated by the Revolution on this chart for you. So just to kind of take a look at really the pit trading hours for you on what our software called for the day today on crude oil. 2 short signals, or 1 short signal early, 1 long signal, which had a whole lot of opportunity, obviously, and then 2 short signals after we hit Fibonacci resistance up at the high. So just to kind of summarize, we've got a roadmap using our Fibonacci support and resistance areas, and then we've got specific rules for generating entry signals based around those Fibonacci support and resistance areas. Now, one of the other things that we've been incorporating over the last month and a half and really doing a lot of work with is the Bloodhound software. And I know a lot of you guys are familiar with the Bloodhound software, and short version of the Bloodhound software is it's a drag and drop methodology where you can take your indicators and you can write all of your and set up all your conditions and block them together and put them in pieces and generate a painting of the background of your NinjaTrader. And just to kind of give you a little bit of an idea of some of the work that we've done with Jeremy and his group at Shark Indicators on the Bloodhound, we've taken all of our indicators and we've written 4 basic rules. It doesn't look like 4 here, but it is 4, and we've written the conditions for our indicators, and it will help you visually see where there's opportunities on the chart even beyond what we've done. So it allows for you to overlay or paint the background, and we'll get into some pictures in that in a minute. So to really talk about the automation of technical analysis. And as a trader, you have a choice. You can learn to do manual Fibonacci on your own, and you can spend hours a day doing it. You can also do long division, should you find yourself in front of a long division problem. I myself personally would much rather use a calculator. And the reason I would use a calculator is not because I can't do long division, it's because it's easier, it's quicker, and I know that the accuracy is going to be there. So when we automate Fibonacci support and resistance, and keep in mind, we're taking into account every swing and every ratio in every possible scenario that's happened in the last 30 days, 90 days, however many days you have back on your chart, and we're removing subjectivity. We're not saying, oh, we'll do these ratios today and we'll do this one tomorrow, or hey, I went out to a wedding last night and I didn't quite catch that one, I should have had it. When you pull up your charts, your analysis is done perfectly every day, the same way, and with this type of consistency, you're able to do one of 2 things. You're able to, number 1, test out the consistency of that analysis over history. So, I would never, ever tell anybody, hey, just jump in and do this and just hope to God it works. We really work very diligently on, educating the trader on what the rules are, educating the trader on how to even filter the rules and make the rules better. And we also teach the trader how to test the software going back against historical data. If you can't test your analysis over historical data and see what you would have done, you will never have the confidence going forward. So we really tell everybody how to do their due diligence, if you will, on any software program. The automation allows you as a trader to instantly see, where's my target going to be? Where is that next Fibonacci support? Where is that next Fibonacci resistance? And where am I getting in? Am I going long directly into resistance? There's not enough reward there. I shouldn't do that trade. Or am I going short at Fibonacci resistance and I've got $500 a contract all the way down to my Fibonacci support? And I know because of where I get into the trade, I only need to risk 100. So you're able to really see and know before the trade even happens where the market should go, how much you have to risk in order to try to get there. And this automation also does one more thing. It allows you to trade multiple markets. You can do manual Fibonacci's on your own, and you can do overbought and oversold, and you can run a lot of different stuff on your own, but you're going to spend more time analyzing the chart than trading the chart. So it allows you to really trade multiple markets with consistency and know that your analysis is done. And bottom line, all of this testing and automation gives you the confidence that you're going to be taking the right trades. So how do we put together a Fibonacci roadmap with the T3 Fibs Pro Trader? Then we take automated trading signals generated by the Revolution software, and then how do we take this Bloodhound program and set up a simple visual filtration system for ourselves? Now, we didn't get done with this in time for this webinar, but Jeremy and my programmers are hard at work at the integration of the Bloodhound and the Revolution software together. I'm going to show you more of a manual filtration version now, but very soon we're going to have this done. So let's take a look at, this is pre-market activity on the crude oil from today. I always like to use current charts so that way you guys that were watching the market can really relate. So at 2 o'clock in the morning, what we've done is we've written a higher time frame filtration system for the Revolution. And essentially what it does is it plots green if the higher time frame supports long trades, red if it supports short trades, and vice versa. So you'll see that switches back and forth as a background paint on there. When we look at the Revolution signals, we say, okay, it's okay to take short trades because the background is painting red. Very simple, very straightforward. The Revolution generates a long signal here, but the background is red. So this is one that would be filtered out by using the Bloodhound software in conjunction with our software. Again, this is something that we're going to integrate together, and hopefully we should have that done very soon. So you'll be able to actually turn on the Bloodhound inside of our software and not only get the filtration that we've written, but if you would like, or you have your own indicators, or you have your own strategies, you're able to take those things inside the Bloodhound and integrate to our trading system as well. So it really gives you full flexibility using the Bloodhound along with what we've got, which is already established. So you'll see, again, long signal this morning, momentum trade that the Revolution called, and the Revolution does plot these numbers. This number represents how much profit potential was in there before it came back and got stopped out. Again, a perfect world scenario, getting a fill on the close of the bar and getting out at the top. You know, it's there not to say, hey, you should have made 400, just to let you know that there was $400 available in that trade setup if you manage the trade. So again, you'll see how the background is in line with what the Revolution is calling. Again, as we traded down through support, pulled back to resistance, we got another momentum signal here, and again, with full confidence knowing you're coming from Fibonacci resistance, the higher time frame supports it, and again, looking out into the future, where's your profit target? your profit target is down here at 92.57. So you can see that Fibonacci in advance, and you know where the market's going to go with a high degree of confidence. So just to kind of break it down into the three pieces and the three steps, and this is, again, today's crude oil chart, so this is not something that I made up. This happened today, and you guys can see it. We have really a three-step process. The T3 Fibs Pro Trader generates the red and blue support and resistance lines. So that gives us our roadmap, our Fibonacci roadmap for the day. So we have resistance is met, and then we have shorts that are okay because the Bloodhound background is red. So again, using Fibonacci as the target, you can see that we overran this support by a little bit. For those of you guys that know divergence, you can see our MACDs had divergence at the bottom. So we were looking for long trades as that resistance broke and turned back into support. And you can look out into the future. And again, Fibonacci resistance becomes the first target. Never even had a down bar, and ran all the way to the next Fibonacci resistance area up here at the top. Again, same process in reverse. Now that we've hit Fibonacci resistance, we can start looking for shorts. As the higher time frames and lower time frames roll over together and the revolution generates signals, we're able to take these signals. The first one lost momentum, and then the second one obviously made it down to and a little bit further past the Fibonacci target area. So it's a very complete package of not only the roadmap for you, but automated signals that'll pop up on your chart, and the ability to filter out using multiple time frames or even any other criteria that you guys have that you can use to make our software better. You know, we're very, very confident in our ability to teach traders, you know, to be successful and to be able to read the markets and really be able to analyze them properly. Not so big-headed as to think that we're the only way you can make money in the market. So if you've got something that works and works well for you, overlaying these Fibonacci areas on top of what you do could give you a little bit of an extra edge as far as profit targets or not taking trades into these zones. So I think there's a big use for Fibonacci for everybody. One of the other things that we do when we are teaching traders is we go through four simple principles when you're looking at trade setups that are generated by the revolution. And you'll see there's a lot of talk about this in the video on our educational page on that PDF. But we go through, you know, really defining direction, really defining the exact area where you should get that trade from, and then what's the exact criteria that you're going to have to go through as far as an entry signal. And then how do you go through and check your risk on the trade versus the reward. And I'm not going to get too deep into this, but this is something else that you'll see as you go through the educational stuff on our website. Again, as you go to nextgent3.com, I'll give you that at the end. On our education page, you'll be able to click that on there. Bottom line, you know, Fibonacci has become mainstream for one reason and one reason only, because it works. And the more accurately you can do this type of analysis, the more accurate your trading will become. Fibonacci is dynamic. You know, it changes as market conditions change. If the market becomes more volatile, Fibonacci support and resistance areas naturally move farther away from each other. As the market starts to contract, the Fibonacci areas dynamically start to become closer together. So it's something that is dynamic, and that's why it works on Forex. That's why it works on stock charts. That's why it works on futures trading. That's why it works on little time frames. That's why it works on big time frames, because it's dynamic for whatever data you put into it. You know, we really provide, you know, for those of you guys that don't have it, a complete trading plan, a complete trading guide, and a complete methodology. So if you're already successful, I don't ever like anybody to stop what you're doing. I like for you to kind of compare them head to head, apples to apples, and see if it's something that can be beneficial. I've had a lot of people abandon what they do, when they really understand and see what we do and see the accuracy. And we're talking about being able to really, down to the exact bar and the exact second, know that that's the perfect bar for getting in. And that's really, really the objective of our training and what we do. We've got a really comprehensive training staff. We run a live room in the morning, and we really focus on crude oil because it provides so much opportunity. So we run charts live. The signals happen live. An educator who's been with me for 7 years runs this room, narrates through the trade setups, and then really allows the traders to post their charts in the room and to get feedback. Hey, did I do it right? Did I do it wrong? How could I have done it better? And it's a very, we focus on education, education, education. So if you guys get a demo of the software, you'll see that day in and day out. Again, just to kind of reiterate, everybody must do proper due diligence and test out these rules, test out the plan, test out the setups and the exits. And, I've been in this business now for almost 17 years, and if I had $1 for every time I heard somebody who said they wasted money on a $500 set of indicators, but they lost $25,000 trading the market, that's an expensive trading system. If you spend more money on a system that works and you can be confident in, and you end up making $1,000 a week, which is $50,000 a year, or you trade 5 contracts and you make $5,000 a week, that's a system that's worthwhile. You will never know you have that system until you test it out. So please don't take my word for it. Beat it up, test it out, make sure any system works, whether it's mine or anybody else's that you're looking at. Our educators are great. Our tech support is fantastic. And traders who bought our Fibonacci engine back in 1999 still trade it today. And there's a reason why we have clients that have been with us for 10, 12 years, because it works. So, we've got other videos that are on our website, narrations through some trade setups. So if you guys want to go in and kind of see some examples of the use of our software, please feel free to do that on our website. Again, for are familiar with HotCom, I know a lot of you are. We run a live HotCom room every morning, and allows people to post charts, ask questions, and really go through all of the education. So when we do a demo of our software, just to kind of give you an idea, if you don't have NinjaTrader, we'll get it for you. We'll get live futures data into the NinjaTrader for you. We'll give you full working copies of our software, all the bar types that you need, really everything that you need in order to do your due diligence and really beat this thing up. We offer one-on-one tutoring for people that need it, group tutoring. We run 2 rooms. We run a live room in the morning, and then we run an afternoon review session. So we'll also get a demo of the Hound software along with the templates loaded up for you as well. And just as a special offer, just to let everybody know, if you purchase our software before the 15th, we're going to include the Hound software for you at no cost. So we think it's a very valuable filtering tool, and as we integrate it fully into the signal generation, it's really going to provide a lot of opportunity. We also, if you're in the U.S., we offer financing for everybody that wants to do software that doesn't want to pay for it up front. So we have that available for you. And again, our website is nextgent3.com. So if you'd like to get a demo, just go to the website, fill out the demo form, and we will get with you and get you loaded and get you started. Also, you can visit sharkindicators.com for more information on all the Hound software and all of its full functionality. There's a lot more that it does that I didn't get into for time restrictions, obviously. So we appreciate really everybody's time. I know some of you are up late in Europe and around the world, so we appreciate that. I appreciate everybody at the Trading Pub for allowing me to present, and I'll be more than happy to answer any questions that you guys have. So fire away at me, and we'll get through them. All right, let's see. Badrash, can you apply T3 signals to today's Google? Yeah, I can, but I don't have it up and running. So it works perfectly on Google and Apple and everything else. And we did a lot of stock twits signal calling for a long time, which really became a pain. So we stopped doing it because it kind of interferes with what we do live. But we've got huge amounts of posts on past Google, and so if you pull up our Twitter or just stock twits and just search NextGen, you'll see a lot of historical examples on that. Swing trading stocks, Hank, your question. I'm trying to go back here. They're kind of in here. Swing trading stocks, absolutely. Definitely something that you can do with the software. The nice thing about our rules and the way we apply Fibonacci and all of our rules, the rules are the same if you're trading the smallest of tick charts or if you're trading long-term swing trading or position trading charts. Absolutely nothing changes, and that's really what I was setting out for in the beginning. Is I want one set of rules and one methodology that you can use on every market, every chart, every time frame with the same amount of consistency. And that's my idea of a robust methodology. You know, it doesn't work on some things and not on others. It works on everything in every market and every time frame. All right, let's see. Paul Trader, yeah, you can trial the package, obviously. What are your predictions for tomorrow in the Russell? I love that, TD. I predict it's going to go up and down. And I'm probably going to be right. You know, it's not predictions. It's just, it's going to generate levels of support and resistance. And if support holds, we're going to go long. And if resistance holds, we're going to go short. And if resistance breaks and becomes support, we're going to look to trade in the direction of the trend to the next one. And that's really all there is to it. It's not rocket science. So it's just a function of really understanding where to get in and where to get out. So let me see. Right now, it's a 32-bit program. We're working on a 64-bit version, which will be later. Your 64-bit machine will run, but our software is 32-bit at the moment, working on a 64-bit, but it runs absolutely fine. Little secret, when you run the 64-bit version, it's going to look cool. And there's going to be absolutely no difference from the 32-bit, but it'll make you feel better that it's 64-bit, but there won't be any difference. You know, the methodology is the same as it's been since 1999. All right, so how many percent can I? Joseph, you know, that's a ambiguous question. I would like to say with a lot of confidence that you would be able to make, and I'm just going to use crude oil futures as an example. If you were trading one contract with a $5,000 account and you didn't make $5,000 a month, which is 100%, I would be disappointed in your performance. So, you know, if you want to look at it from that basis, you know, 50 to 100% a month is my expectation for all of my clients. So, you know, are there some that make a lot more than that? Absolutely. There's also, it's not a function of different software. It's It's where they are in the learning curve of the application of the software. So, obviously in the beginning, we tell everybody simulation, get the process down perfectly, work your way into one contract, and then earn your way into 2 contracts and above. So, it's just a function of consistency. It won't work on Thinkorswim. You won't need it. And MetaTrader 4 doesn't run on that. It's really NinjaTrader. Billy C, it works on TradeStation. We've had 2,500 TradeStation clients leave TradeStation to go to NinjaTrader because the interface for trading is much, much better. And TradeStation, and we desperately begged them a long time ago to get the Renko hybrid bars in there, and they told us where the doorknob should go on our way out. So using trade does get from FXEM. FXEM just doesn't provide that good of data. So either Kinetic or Gain typically is a much, much better Forex connection for NinjaTrader. And the price, Gulab, I appreciate your question on that. We charge there's 2 options. You can lease the software for $5,000 for a year, or you can purchase the software one time for $9,500. RN, your question, will the software pull a watch list? The no. And that's one of the, I guess, downfalls of NinjaTrader, because I love them, but their market analyzer is substandard at the moment, and I have been promised it's going to be much better, similar to the functionality version. I hate to kind of put all that in one sentence, but I did. So we had our Revolution generals. So we're hoping that will be done soon. All right. Let's see. Yes, Simon, you calls darn day on every market, but if you wanted to tinker with it, you'd be more than happy to. All right, so let's see. If you buy it, you'll have, yeah, sorry about that, Alan. Then you're not able to do it. We've got financing if you're in the U.S. You can put $1,000 down and it's a few hundred a month. But if it strains you to purchase our software, please don't. If you don't have enough money or you're trading on fumes, don't do it. It just creates too much. Work hard, quit your job, save more money, and then come back. David, even if you bought it, we in finding the upgrades to all of our software cost for everybody. The trial period is 10 days, so you'll have plenty of time to really test it out. And it works. So Ninja Interactive Brokers work. No coding is necessary, JP. Again, I've already answered the question on costs. And TD, yes, I do trade it personally. So I trade in the morning, and then I do software stuff in the afternoon. And the 2 costs, it's $5,000 a year to lease it, or $9,500 to purchase it. JP, there's no money back guarantee. The software does its analysis, and that's what you're buying. That'd be like asking, so we could guarantee I would be a master carpenter. So You just have to test it out. It does work on a Mac if you run other programs, so basically you have to run Windows on your Mac in order to make it work, but there's a lot of people that do it. Does it sound bad, guys? I'm sorry. I don't know what to say. All right. Do we have fib timing? Mike, I actually wrote fib timing. All right. Can you guys hear me still? I wrote fib timing way back in the early 2000s, and it doesn't work as well as people might think it will. So I automated Fibonacci time confluences, and it's really more important on the momentum and price, time. Anybody can do 1,000 different time projections and say, see, we got it. But it's more important where it turns, not when it turns, I found personally. Barbara, yeah, you get a year of our educational room included with the purchase price. So, the one thing we want, and anybody who has our software will tell you, is we want you to know how to trade it, and we want you to learn it. Obviously, we can't force everybody to be successful and use it successfully, but we are adamant about the process. All right. Any other questions that you guys have? I'd be more than happy as well. They were Renko Spectrum bars, Moz. If you go to Innovative Trading Solutions, search that in Google, you'll see Renko Spectrum bars. So again, I'd like to thank everybody. You need NinjaTrader, Roger. It works on TradeStation, but we're going to phase it out. All right, guys, I'd like to thank everybody. Morgan, thank you guys at Traders Pub as well, and everybody have a wonderful afternoon.